So if no questions, I was just gonna hit y'all with kind of what I use for my stop losses. Because a lot of people they do just ask me if I'm still in a trade a lot of times. I mean, I always say I when I am in a trade, but my account, it might be bigger than a lot of other people who's currently trading in the market. So I want to. I'm playing with over a $10,000 account. So when I do lose, let's say 120, $130, I mean, yeah, I don't like losing, but at the same time, it's just like my risk is just a little bit bigger than most people, But honestly, I'm finna start kind of getting back to my, risk management levels and stuff like that still, I guess. But one of like the best things that you can use for a stop loss and something that I recommend is two EMAs, either the 21 EMA or the 9 EMA. The 9, that's a hell of a lot better for day trading. The 21, it's semi for day trading and swings. It's just a little bit more of a lag between the 9 and the 21. Because the 21, that's calculating for every 21 candles, this is the moving average for it. The 9, for every 9 candles, here's the moving average. So if I was to show y'all just kind of the difference between the two, I think the 9 is already popping up. There we go, the 9. I just change this to orange. So here's my 9 EMA right here. Well, the orange one, and the blue one is my 21. So had I would have took Apple at the beginning of the day, I like waiting for candles to close below my 9 or my 21 EMA. But really I use the 21. I might start using the 9 again. But if I was to use the 9 on this trade right here, so I got into Apple at the beginning of the day, I probably would have did one. I would have sold it in one or two decisions. One, when it hit my profit target right here, and that's a reversal doji, or two, when it closed below my 9 EMA, which is this one right here. So at this point, I kind of knew that if I was getting Apple, Apple was not 100% winner. Not every trade will hit for 100%. I want to say those are kind of just like rare instances. That's why, like me, if I'm up 20% sometimes, I'll start trimming my contracts because I'm always buying more than one. Like at minimum, I'm buying two contracts every time I trade. So when Apple was to make this reversal doji at the top of this uptrend, could have sold here because it already hit my profit target, or when it closed below my 9 EMA. But I always look at what kind of got me in the trade. So if I got into the trade based off of the 15-minute time frame, and I got into Apple right here because it closed above, I could have sold it when it hit my profit target, or just so I won't, take on too much of a risk. Whenever it starts closing below my EMAs, that's when I'm kind of cutting it and possibly either breaking even, or if it closed right here and I cut it, it might be like a 10-15% loss, which isn't as bad as like a 30 or 40% loss. But with swings, so the real reason why I hate swings and I don't really too much care for them is because whenever you swing at anything, you're risking 100% of what you put up. And with day trades, if I don't see something that I like, I'm instantly getting out at that point. But when it comes to swings, I mean, y'all seen this week in the market, like every day was just, kind of not going for us as far as swing wise. So like Tuesday, Wednesday, those were kind of shitty day, were rare days in the market whenever the market first opened. But it's kind of like the end of the trading day. It kind of told us, okay, cool, calls might be safe to play for the next day, but everything just went sour. So like with swings, you're risking 100%. That's kind of why I kind of like shying away from them. I'll do them here and there, just whenever I see something that I really like, but I'm more of a day trader because I have better control of my money. Swings, you can't control what happens in the market the next day. I want to say only problem with day trade sometimes, and sometimes y'all seen when I want to say Powell or Joe Biden, they'll come talking the market. And as soon as they say something about inflation, taxes, or whatever, the market it just shoot down like almost 20, 30 points. So you got Google, it shoot down almost 10, $15. And by the time you try to sell it, it just, burns you in a sense. Like that's kind of the only thing that you can't control with day trades. But for the most part, everything else you kind of can with swings, not necessarily. But when I do swing, I don't like swinging no more than $200-$300. And a lot of times, if I am swinging, I'm swinging off of the profits that I made off of day trading. Not 100% of my profits, maybe 20 to 30% sometimes. But if I'm swinging, that'd be the only time that I don't hop into multiple contracts. I just hop into one and I just kind of let it go, see what it does. Unless I'm getting into long term position, 6 months plus out. You know what I'm saying? But really, the objective of the game is to, keep your losses at a minimum and also just try to maximize your wins. So, like I said, when I see things above 20%, that's when I start trimming. I've had, 60%, 200% winners and stuff like that. But honestly, anything over 100% is a great trade. And me personally, I would look to take my money after I made 100%. Well, I ain't gonna lie, I kind of see how much over 100% it can go. If not too much over, then I'll take my money somewhere up, somewhere over 100%, and then I will hop into a position that's kind of equivalent to that, but cheaper. So that way, I'm just playing that position with my profits. So if I was to play Home Depot, for example, I made 120. I put up, let's say, $150, and I ended up making 200. Yeah, I made 200 profit. So that's well over 100%. That's like 125%, maybe give or take. I would take part of that 200, maybe let's say 125, to where I still have $75 left of profit, and I open me up a cheaper Home Depot contract position. Just to kind of, because I still might have faith in that play. If everything goes wrong, I still made $75. Excuse me, $75 in the position that I ended up selling ahead of time. So it's kind of like playing just really defense to your offense. Like, yes, you think this play is going to work, but you also got to think about what if it doesn't work. So if it doesn't work, I've already put these plans into place to where I'm still up $75 if everything was to go wrong. And I kind of seen that with Jamila, because I took the play too, but I ended up just taking my money, and I don't even think I made 100% in that hoe. I made like 50, and then I ended up taking my money because me, all money is good money to me. Sometimes I don't think every play, like I said, is gonna hit 100%. I didn't think Jamila was gonna do kind of what he did. Ended up surprising me. But honestly, I kind of also have to understand market sentiment. That was gonna bring me to my next point. I want to say Wednesday, I think the CPI numbers came out, and as soon as they came out, I want to say the market, it ended up taking like a fat ass shit, and it kind of didn't recover for the rest of the day. So it was just like kind of knowing that as well. Calls wouldn't have been good at all that day. I honestly don't know why the market was up today. I don't think it's gonna be up tomorrow, but it's also understanding market sentiment, like what's going on in the market and why is it up, why is it down, or why is it choppy. If it's choppy, I'd rather not trade. I mean, as y'all can probably see, it's been multiple days where I don't even hop into Nathaniel. You know what I'm saying? That's because I'm not finna give back my profits that I made in the market right back to the market. The goal for me is to, like I said, keep as much as I can and not give any of it back. You know what I'm saying? So that's kind of like my biggest thing. Just always like kind of be prepared for every situation. Play offense and defense whenever you playing this game of trading, so to speak. You know, so if you're up big, always take your money, in my opinion. Because
Yeah,
I've seen somebody be up $1,000, and I want to say not even 30 minutes later, they ended up being down $400. You know what I'm saying? Because really, they just got greedy. You know what I'm saying? But me personally, I would have took that $1,000 profit and hopped into another position of that same stock and only put up like $200, maybe 300. I mean, maybe five because I just made 1,000.
and another thing, just a rule of thumb: if there is ever a time where you get where there's a trade that you take and it's 100%, just take your money. 100% is great on any trade, no matter what you put up. Don't wait for me and Jay Lee to say, "Oh, we're out the trade" or "get out right now." Like, don't be oblivious. Like, you see, it's good money on a table. Don't try to hold on and try to be like us or not take your money. We in the group, we specifically post pull your profits right here because at that point we're getting nervous about the stock. I mean, it could possibly keep going, but then you don't want to run the risk of losing, half of your profits just because you trying to hope and pray that it's going to go up or down. So, especially if you're not good at technical analysis. If you're not good at technical analysis and you take our trade and we say pull your profits right here, it's 50, 75, or 100%, then take your money. Just because we say we're holding, like Jay Lee said, I posted an L today, it was $113, but I have well over 10K in my account. So I can lose $100 every week and not phase it. But those guys who has $500 in their account, 250, even 1,000, you can't take too many $100 L's. You know what I'm saying? So when you up 50%, 75%, and 100%, take your money because at the end of the day, you have a smaller account which you're trying to build. And the only way to build smaller accounts is to take your wins at the best, at the highest point. And at the highest point to me is 100%. It's like, well, anything after that, you being greedy now, especially if you're not good at technical analysis. Now, that's another thing. If you're good enough to read charts, hey, we got you in the trade, you can get yourself out. That's why most people in our group took our class and should understand that concept. We got you into the trade, but you should be good enough to start reading the chart yourself. So you can be able to say, hey, well, this trade didn't hit where I'm comfortable at. Let me take my money. Because that's one thing we can get you in a trade, but it's gonna be tough to get you out, especially if you don't listen. If you take our trade, well then listen when we say exit the trade. Don't hold on. If we say take profits here, we up, take profits here. It shouldn't be no second guessing because now at the end of the day, whether the stock goes up or keep going up, you already made your money. Now you plotting on the downside. So once you see that rejection, you should already be getting your fingers ready for puts, not trying to get back in a call position because we know the way Jay Lee trade, he's a breakout trader. So after every breakout, just know a pullback is coming. So when it start breaking out and you see that first rejection, it's time for you to get out and take your money and then buy more on the pullback because we know after the pullback, it's gonna shoot up to where you need it to go. So, you know, just keep that in mind whenever you're taking plays. And another thing, don't overload yourself with plays. Yeah, I mean y'all in the group to get plays, but it could be days where Jay Lee called 3 plays. Well, knowing Jay Lee, he called 5, 6 plays. I come in with 3 plays. That's 8 plays. Not all of them. There are days when we hit all our plays that we call. But like this week, a market like this, there will be plays that we take L's on. It happens. So you don't need to take every play. If you take one from me, take one from Jay Lee. Or if you take one from Jay Lee, don't take none from me. Just try to win that trade. So before you even enter a second or third trade, make sure you win the first one. So that way you already locked in some money and now you can go return back to the game. Don't take 3, 4, 5, 6 plays because one bad day, you're gonna be panicking. Your whole account bleeding. If you swinging all calls or all puts, one bad day in the market can fry your whole account. And you looking like, damn, now I gotta put more money in. Or what happens to most people, they can't sit through a bad day in the market. They just itching to get in more things. So they'll see their whole portfolio red and start selling losses. And then now you back to square one. Now you got to put more money in your account. But if you would have just one, took less plays, and two, cut your losses at your stop loss, you will never, you know what I'm saying, you will never should be losing 100% of your premium. Unless you have triple that in your account. Like I said, you'll never really see me post a $500 L or a $600 L because I'm not risking that much. As soon as I get down almost 50 to 75% or 25%, and my technicals say that, hey Twan, it's not going this way, I'm getting out. At least I'm gonna save me at least get half of my money back and be ready to play the downside on something else or the upside if I'm playing puts. So that's very important. Like just making sure that y'all do that, taking account of what y'all looking at and what are y'all actually playing.
And another, I want to introduce y'all to like this strategy I use. Y'all probably see me use it, but just didn't necessarily know it's a strategy. It's the runner strategy. So pretty much, like I said, every time I hop into a contract, I'm getting into at least two of them when I'm day trading. Could get into four, could get into six. I want to say I just started getting into six of them, but getting into multiple contracts. Whenever something, let's say, hits my first profit target. So let's go back to that Apple example. Let's say I got an Apple at the beginning of the day. Whenever it hits my first profit target right here, I'm gonna go ahead and I'm gonna close. Well, I'm gonna start trimming those contracts. If I have two, now I got one. If I got four, now I got two, or maybe now I have one. But I'm letting that last contract, see if I'm just trying to let that last contract do whatever it needs to do for me. I think that Apple could still possibly go up, so I'm not closing all of my contracts. But in any event that Apple does go my way, the most I'm trying to do in that last position, or the least I'm trying to do, is break even. So if I was to break even, I still made money off of the first 1 to 3 contracts, however many I had, that I ended up selling. But I don't want to break even. So if I was getting to this trade, I would have probably sold it around my stop loss right here after I realized, okay, this is a hard rejection. Then we got 2 strong red candles. I mean, I remember hell, it was a point where it was a time where Willie wasn't like one of the best traders. And every time he'll hop into a trade, he'll know when to sell when he always see 2 red candles back to back, especially 2 strong red candles just like this. I mean, and that was a good strategy for him that he was using. It helps him manage his risk. Maybe a lot of y'all can pop. I mean, it doesn't always go your way exactly. So like these 2 red right here, but it never closed below my 9 EMA. I'm actually going to start using my 9 EMA again. Actually, never closed below the 9, so that kind of gave you a solid reason to stay in the trade. But runner strategy, sold it at the top because it hit my profit target. I want that other one to just kind of see what it can do for me. If it doesn't do anything, okay, cool. worst case, I'm breaking even on on that last contract. Best case, I'm selling it kind of wherever I feel like my stop loss should be. So the 5 minute got me in, 5 minute gonna get me out right here. If I got in on the 15 minute time frame, I would have by the time I got out on here, I probably would have broke even. If it's the hour that got me in, I mean, I might either be swinging or I'm waiting until something closes below this right here on my hour time frame. you know. And if it doesn't, cool, still in the trade. If it does, then I know, okay, maybe I need to exit this trade. And that's why we say kind of make sure you win your first trade before, you start hopping and looking into other things because me, I'm looking at 6 screens every day. And I'm pretty sure that like a lot of people that do trade, they're trading from their phone, to be real. So you might be going back from looking at Apple to Google to FedEx, you know, and just looking at the three of those, you might not be able to catch something a lot of times that you would catch if you were just looking at one of them. Because even if I am in an Apple trade, I'm still looking at multiple time frames on Apple just to make sure, it still looks the way I like it. I'm not on my big screen. I might have my 1 hour and my 15 minute up. Kind of making sure that Apple isn't making any patterns that's going against me. That's another thing that I use to stop losses patterns. Who was it? I got somebody today. I got into Datadog today and got into it because it broke here. As soon as it broke this trend line, this is when I should have got out, but I wanted to see if it would break this support level. Broke support, broke this 21 EMA. Okay, I'm out this trade. And I could have started playing puts because it did break this trend line, but sometimes I don't like double dipping in the same stock unless it's Google because as y'all know, I really fuck with Google. And I like even after we get done with this, I'm gonna go back and I'm gonna replay what happened today on Google. Even though it didn't move, I damn near hopped into it. And it's a good thing that I didn't because Google really didn't have the volume. What time did this break? Around 9:50. So if I'm looking at this around 9:50 today. So about around 9:50, Google broke. So this is normally when I would enter into my position because Google broke this triangle right here. I mean, granted, I could have scalped it, caught this $8 move maybe, but every time I'm hopping into Google, I want more than an $8 move because Google, it can give me $20 on any given day. But if I'm looking over here around 9:50, I see this fat ass red candle right here starting to form. Futures, it also just broke the high of the day. So when it closed right here, I was like, okay, cool. I just need to see what this next candle looks like, as well as I need Google to break this high of the day right here. Google literally went to the high of the day. And as with futures, both of them, they ended up tanking. So kind of, I didn't see any volume on Google either. So that's another reason why I didn't hop into the trade. And I also just wanted to see it break the high today. And I was also watching this and I didn't see any movements that I did like on it. So I kind of shied away from it, but that just comes from me watching Google constantly. Like, even when I lose on Google, I'm looking at it that same day trying to figure out, okay, why the fuck did I lose on this? Like, I know Google like the back of my hand. Shit like that shouldn't be happening. You know, I'll say it's somebody in our group. They'll just look at something for what is it like 3 hours straight. They'll look at spot 1 minute time frame. You know what I'm saying? So yeah, that's kind of my thing. But hey, you got any questions? If not, I can keep rumbling.
Yeah, you was talking about the boy Craig. He looking at that 1 minute future,
Oh yeah, and he'll just study that
training that
like
eye.
hours at a time. You know, and that's what kind of made me want to study Google a lot more than how I be watching it. You know, so now I come and I really do my research on Google, and I try to do my research now on things that aren't in the aren't in fame: Facebook, Apple, Amazon, Netflix, Google. So I think Tilray is like the next version of Google. So I low key been kind of trading this right here on the side, and I think Tilray is, really kind of something. I've been trying to get acclimated with it first before I just really start calling it. I think I got to the position where, I am kind of acclimated with it. So yeah, I'll probably be seeing a lot more Tilray plays from me. Like I said, it's kind of just like Google, but like a cheaper version. $1 move on Tilray will give you a $10 move on Google. So I want to say today Tilray was nasty, but I think tomorrow it'll be even worse. So we're gonna see. But yeah, that's kind of like the main things that I wanted to hand over was making sure that like a stop loss is intact, whether it's a percentage basis, EMA basis, or really or a pattern basis. So if you in a trade and you see something make a bear flag, you in calls, it breaks that bear flag, there's no way you should still be in those calls. Or if you in puts and something breaks above a triangle, there's no way you should still be in those puts because even if it runs for a little bit, it's still gonna hurt your contract. I mean, and last thing with day trades. So if you run out of day trades, get another trading app. I know Webull is kind of similar to Robinhood in a sense as far as how user friendly it is. Um, Thinkorswim, Webull, you can both get cash accounts on both of those to where you can have unlimited day trades. Or maybe create a second Robinhood account. No, I don't know if you could do that or not, but just so you can have more day trades to play with, because especially in this type of market right now, swings is definitely not the way to go. So just kind of try to utilize that as much as possible. I mean, day trades is really how you preserve your capital, in my opinion. I mean, you might not hit for $1,000 every day, but shit adds up sometimes. If you take $40 here, $20 there, and then that next play you take $90, you done made 170, 180. So that you can probably risk 120 off of swinging, which is strictly profits. So if I don't make no money, I'm probably not swinging because most of my swings are my profits that I've made during the day, so it won't hurt me as much. But yeah, you got anything, Torn?
Oh no, I had said my little spiel earlier.
Bet. Yeah, I want to say that I was really kind of yeah, I was just setting a stop loss with your account. If you got $1,000 account, don't be spending 600 of it on one trade. I mean, it might go in your favor, but you also have to think about what if it doesn't. Like
So
will a $200 loss hurt you? Or what you was gonna say?
I said, think of it like this: if you have $500 or less in your account, you should be making one trade. Once you win that trade, you can get another one. Once you get to 1,000, you can gradually pretty much work your way up to getting in two things at once. You shouldn't be in more than three things at one time, especially in a market like this. It would be different if we knew it was clear cut uptrend and stuff was making higher highs. But since we know that fundamentals takes, put a hit out on the technical side, you shouldn't really be swinging and entering a bunch of trades because a lot of our members is taking hits because there are multiple things and they're not letting one thing get them money first and then re-entering with the profit money. So now at the end of the day, your premium will be always protected. And then typically you should make enough money to buy another contract if you played your cards right, but you should never be in multiple trades. One, if you don't know how to read technical analysis, and two, if you don't have over $1,000 in your account. Just that's just simple risk management and cutting your losses. Like it's one thing to have the amount of money that can afford that loss. So if you got $5,000 in your account, really $100 contract, you can risk the whole thing. But if you don't have that much money, if you got a $500 account, you can't be risking $100 L's. Because 4 L's, you done. You damn near out the game. So just keep that in mind whenever you guys are trading. Like if you don't know how to read technical analysis and we say pull profits, take your money. If you know how to read technical analysis, then you should already have your exit strategy in place. You should already have at least two profit targets to take your money, minimum. And you should never ask when to get out if you know how to read technical analysis and we got you into the trade. Because 9 times out of 10, if we up 50, 75, and 100%, we're gonna let you know. But then it comes on you if you want to take at those positions. But in a market like this, keep losses small and minimize swinging. And some days, if you're using Robinhood or a platform that you don't have a cash account, if you smoke all 3 day trades, well, hey, I mean you put up for the week, and hopefully you blew those 3 day trades and you got great money. Because if you didn't, then you put yourself in a bad position anyway. So you might just not need to trade that week. And kind of, I don't know if Jay Lee went over this earlier, but you can take days off. It's okay. It's okay to not trade every day. I didn't trade today. So it's okay to take 2 days, 1 day off. You don't have to trade every day. You're going to miss out on money. It's over 20, 30,000 different things you can look at. It's something you're going to miss some money regardless. So.
Yeah, and I'm saying last thing, another strategy I like using is hedging. And hedging is just me playing offense and defense. That is when I do swing, I swing, let's say, some Google calls. I'm also gonna get SPY puts or I can get Apple puts. It just really depends. Just in case those Google calls don't go my way, I might make money on Apple or SPY puts. But if Google go one way, Apple and SPY is gonna follow that same way. So I'm kind of playing the market both directions. Don't want to get a Google call and a Google put because at that point I'm better off getting a spread. So I want to say, what was it, Wednesday? Yeah, Wednesday, I swung calls, I believe. I swung FedEx calls, but I also had them with SPY puts. I lost, 30% in those FedEx calls? 35% in those FedEx calls. But I want to say for the day, I was only down maybe $1 $2, and that's because I also hedged those swap. I mean, I hedged those FedEx calls with SPY puts. So where I didn't make money in FedEx, I made it in SPY. So now I'm just starting my trading day with kind of a clean slate because I did hedge. But this right here is definitely the type of market that you would, I ain't gonna say love to hedge, but that you would need to hedge. Just to kind of protect your capital and preserve it, especially if you're a swinger. If you're a day trader, maybe not as much, but I know people that hedge, I want to say throughout their whole trading day. If they call heavy, they gonna get some puts and they just gonna sit on them. Me, I don't necessarily like doing that. I only do it with my swings. But that's kind of all I had. Yeah. Hey, if you don't have any questions, my brother, futures is getting red. I love to see it. But yeah, if you don't have any questions, my brother, that's gonna kind of be it. We'll have this posted shortly.